Hello, this is Dr. Bhushan Shandbag. Welcome to part B of the small video series, Trading the Gaps. Okay, so what are the type of gaps? Let us understand that. See, when I put it here, type of gaps, you will say, sir, we know bull gap and bear gap. No, now there is a difference here. Okay, partial bull gap. Now, what is a partial bull gap? If today's open is higher than yesterday's close, that is a bull gap, but it is not above yesterday's high. So yesterday the close was somewhere. Today it has opened higher, but yesterday's high was further above that. There may be body or there may be the shadow above that. Whatever. It's possible yesterday was a bearish candle and today it opened up. Or it may be yesterday it was a bullish candle, but later before the close Nifty came down a little and now Nifty has opened above yesterday's close but below yesterday's high. Either way, it is called a partial bull gap. There is an overlap with yesterday's candle, in short. Okay. So this is a partial bull gap. I repeat, what is a partial bull gap? Yesterday's close, today's open is above that, but not above yesterday's highest price. So yesterday's candle is overlapping with today's open, right? That is the partial bull gap. So this is yesterday's candle. Nifty had come up, closed higher. Today, so this is yesterday's close, that H is yesterday's high. Where today it is opening? Today it's opening in between yesterday's close and yesterday's high, somewhere. Then that gap, I call it partial bull gap. Okay. So this is a partial bull gap. So today's shadow may or may not go below yesterday's close. But according to older concept, this is not considered a gap. Why? Because the two candles are overlapping. But if yesterday's close is lower, today's open is higher, gap is definitely there, right? So this is called a partial bull gap. So partial bull gap is formed when today's open is higher than yesterday's close, but not above yesterday's highest price. Full bull gap. What is full bull gap? If today's open is higher than yesterday's close and today's lowest price also remains higher than yesterday's highest price. What conventionally is called a bull gap. That now it is a full bull gap. Okay, full bull gap. So this is yesterday's candle, yesterday's close, yesterday's high. Today it opened higher and went up. Today's low is not below yesterday's high. So this gap is a full bull gap. What is conventionally it was called a bull gap. Now we call it full bull gap. There is no overlap between the two candles. Now filled bull gap. If today's open is higher than yesterday's close and is higher than yesterday's high, but within the day the price falls below yesterday's high, we say it is filled bull gap. So there was a full bull gap which has now got filled up. Sometimes this gap may not be filled on the same day, but fills up after a few days. From our point of study, a gap filled after a few days is not important. Earlier it was given importance, now it's not important. It has lost its importance. Okay, so this was yesterday's high, yesterday's close. Today it opened higher, but today's low came below yesterday's high. So the gap is filled. Okay, so filled bull gap, no overlap at the open, but overlap later on between the two candles. Now it may overlap only with shadow or it may even overlap with the body. It doesn't make any difference. A filled gap is a filled gap. Okay. Same way, there is partial bear gap. What is partial bear gap? If today's open is lower than yesterday's close, but not lower than yesterday's low, it is said to be a partial bear gap. So this is yesterday's candle. Here is yesterday's close, yesterday's low. Today it opened between the, say, inside the yesterday's lower shadow and then maybe going down, but at the open the two candles were overlapping. Okay, then we call it the partial bear gap. Full bear gap. What is full bear gap? If today's open is lower than yesterday's close and today's highest price is also lower than yesterday's lowest price, it is said to be a full bear gap. So this is yesterday's candle, yesterday's close, yesterday's low. Today it opened lower and went down. today's upper shadow did not overlap with yesterday's lowest price. Full bear gap. That is conventionally called a bear gap. Now we are calling it a full bear gap. Again, bear gap may also get filled if today's open is lower than yesterday's close and is lower than yesterday's lowest price. We say there is a full bear gap. But within the day, the price came up and overlapped with yesterday's lower shadow or yesterday's body as well. We say it is a filled bear gap. Okay. Again, today what is happening is important. After a few days, it loses its importance. The older concepts, even after several months, years, people were giving it importance. No. Now the importance is lost because of this pre-open and all which we discussed in the last video. So only what is happening just now is important. Okay. So here is yesterday's candle, yesterday's low, yesterday's close. Today it opened lower, but in between sometimes it came up so that the two shadows are, or even with the body, there is an overlap. Then it is a filled bear gap. Filled bear gap has no importance. But remember, in this remaining three videos, we are going to talk of when it is opens with a gap, up or down, what happens. Okay? So what happens after a few days, we are not interested in it. More in the next video.